There we go. Welcome, everybody, and thank you for joining us on this Keyrock space today. We're joining from the studio at the headquarters of the company. We have today a group of experts in the field to have a pleasant discussion about the future of the DeFi space in 2025, looking at the amazing progress of the field in 2024. So today with us, we're going to have Chris from Fidelity Digital Assets, leading research. We're going to have Nejc as head of business operations at strategy at Bitstamp, and Jack taking its role as SVP at Stablecoins at Ripple. It would be great if you guys can give a quick introduction of yourself to the audience, and then we'll get started. Maybe we can start with Jack.
Sure. Hello and good morning, everyone. It's Jack McDonald here from Ripple. I'm the SVP of Stablecoins, and really excited to be with you this morning.
Yeah. Hey, I'm Nejc, head of BizOps and strategy at Bitstamp. 6 years with the business, and really excited to be part of this panel.
Yeah, and Chris Kuiper, director of research at Fidelity Digital Assets.
Oh, perfect. Thank you very much, guys, for the introduction. So let's get started. I mean, looking back at 2024, we had an amazing growth of the on-chain space. Both in terms of TVL and on volume. We have a year that was characterized from a wide increase in volume, almost threefold in volume on a monthly basis indexes. At the beginning of the year, we were around I think 120 billion, if I'm not mistaken, of volume, and ramping up to more than 400 by the end of the year on a monthly basis. And at the same time, we have a more than 100% increase in LTV or on-chain activity, which brings us to today and what's ahead for us in the year to come in 2025. So I'd like to maybe get started by elaborating a little bit into what are the narratives that are gonna be playing, and what do you guys think is gonna be the main drivers of conversation for the year. Correct? We had Bitcoin layer 2s, meme coins, AI tokens, and DeFi overall as a big topic of the year. Where do you guys think the year is going to take us, and the narratives that are going to dominate the space? I don't know who want to get started, but maybe we can start from the view of the exchange as you guys see it all happening. What about that, Nate?
Yeah, of course. There's so many items to cover. It's hard to pick a field where to start, but kind of from an infrastructure standpoint, we do feel that with this regulatory clarity, which I'm sure we're going to mention many times, that we all hope is coming in the United States, and the tide that has changed in the US. There's going to be this, I think, kind of a game on, or start of the race about how do we bring some of the parts of the marketplace that have previously been offshore. How do we bring that activity onshore? And that I think is going to play out first and foremost, of course, in the US, but then also in Europe with MiCA. So I think that's something to watch. How is the US going to look at DeFi, and to what extent can this be brought onshore? We see major stablecoin players such as Ripple entering the race, which prominent stablecoins being issued. So how can we see that activity that's now primarily offshore? How can this be brought onshore as an example? And then more like thematically, when we look at different tokens or different narratives that we've all followed in 24, I think stablecoins will continue to do well. We're probably going to see the capital kind of move out on the risk curve, which would mean that memes will continue to do well. AI will probably continue to do well. There's going to be, at least in my view, is going to be a big it's going to be a big race and a big boom, and then also probably a decent bust that follows. So that's probably something, and there are a couple of other things that we're focused on. Again, connected to DeFi. We've all seen success of the Hyperliquid very recently. So what happens with some of the high-performance blockchains that are coming in 2024? It very much has been the case that high-performance blockchains have, I would say, let's say the blockchains that have sacrificed decentralization for performance have relatively outperformed in 24. And we do expect that to continue, at least to a decent extent. And more on a personal level, I would like to see Deepin do well as well. So, there's I think these are some of the Deepin projects out there really are real world adoption of crypto. Like, these are perfect use cases for crypto. So we'd also like to see that do well. So that's a lot, I'm sure. So probably handing the baton over to my colleagues here.
You were not joking when you were saying that there was a lot going on, wasn't it?
Just too much.
That's pretty good. That's pretty good. I mean, it's interesting when you look at it that way, Kirk, because you have almost the two. You look at the two complete extremes of the curve being both very bullish on the year, correct? From like meme coins and the most speculative instruments and AI, and then stable coins, correct, which are a representation of use case and payments. And with that in mind, I mean, how do you see these different narratives and these drivers really bringing institutional adoption to DeFi? I mean, I think that we look at already institutional adoption in crypto overall, starting, of course, but how does this play in DeFi, and what are the drivers that are going to allow institutions to really engage into financial primitives on chain?
Well, I'll jump in here. I think one of the themes that we're going to see play out in 2025, and I echo a lot of Nejc's comments, certainly around regulatory clarity. Sitting here in the U.S., there's a big tailwind right now behind us, which is very well received, and you're already seeing the action in there. But I do think you're going to see greater activity within the TradFi world coming into the crypto space broadly and DeFi specifically. Stablecoins are the perfect on and off ramp to that. It's a very logical, I think, next step, and the drumbeat keeps getting louder and louder around stablecoins being used as a real world use case. So I happen to think that you will see less crypto for crypto's sake and more real world use case utility driving the adoption for institutions. I think I'd say legacy users of stablecoin and participants in crypto, which has largely been retail or crypto native funds, will continue to grow. They'll take advantage of the environment that we're in. But in terms of drawing in new entrants, the big drivers of that will be the regulatory clarity, certainly in the US and elsewhere. And then assets like stablecoins that allow this bridging from the old world into the new world in I think in a very understandable and measured way. And it's an asset, specifically stablecoins, which I'm closest to, that when we talk to traditional institutions, they can wrap their head around it. It's the least type crypto there is, particularly when you have a stablecoin like ours that's issued by a regulated entity, bankruptcy remote, et cetera. There's a lot of confidence that comes into using that to enter into the space. And I think that's one of the themes that we'll see out this year.
When you're looking at regulatory clarity, are you predominantly looking at the US, or are there other interesting developments in the world that you think the audience should be aware of that enable the adoption of digital assets and institutions?
Well, certainly, I'm in the US, and the US has been a laggard. And so my ear is closest to the ground here. I do think we're going to see some legislation come out sooner rather than later this year around market structure that will include a stablecoin piece of legislation. There are other jurisdictions around the world that are advancing. I was just on a call yesterday with our colleagues in Japan talking about some pending changes and loosening of restrictions in that market. And I think we're seeing the evolving landscape in the EEA specifically. There's some anticipated guidance from the European Banking Authority that will add some harmonization around regulations in the EEA. And I think post-MiCA, you'll still see more come out there. And obviously, the Middle East continues to be a fairly fertile ground. So I think it is global. The U.S. is getting the most attention right now, I think for a good reason. But you will see other advances elsewhere in the country or elsewhere in the world.
Yeah, absolutely. I don't know, Chris, if you want to elaborate on that.
Yeah. From my perspective, so Fidelity Digital Assets, one of our core products is custody of these assets, right? And so our main clients, our direct clients, are institutional investors. So from that angle, I'll echo what Jack said. I think stable coins are one of the things that they can understand most easily, can see the benefits there. So we just at Fidelity Digital Assets released our 2025 look ahead report. We have a section on stablecoins. I personally don't see this trend slowing down anytime soon. I wouldn't be surprised if we got another doubling in the market cap of stablecoins this year. I think the strong dollar that we're seeing is definitely going to help that. It's not a competitor. It's actually going to help feed the strength of these stablecoins. And then going back to your question on trends as well, it's funny because we in the space, we're very much in the weeds, and we're talking about these rotations between AI coins and all that kind of stuff. But from my vantage point with traditional investors, they're still getting started on the main Bitcoin thesis and dipping their toes in there. So I think 2025 is actually, or could be, the year of Bitcoin in traditional finance firms. And you're seeing this play out in some of the dominance numbers of Bitcoin percentage of total market cap, Bitcoin outperforming many other tokens. Of course, the question is whether some of that rotates into these other things, but we've barely scratched the surface there in terms of these traditional financial players, even looking at Bitcoin as a starting point, as one of the first things to look at as the largest, the one with the most liquid and largest market. But to throw in a few other ones there, AI.
But if I may ask you on that, I mean, if you would imagine a world where, let's say, we want to get these investors to get into Bitcoin, like you said, like the basics, correct? But we want them to adopt it through a native approach, say on-chain, own the asset, not on the ETF side. What's missing from your point of view? Like, why is that step so hard?
Well, it used to be hard to do in terms of infrastructure. It's not anymore. For example, Fidelity Digital Assets, we provide direct custody of the coins themselves on chain. Now there's, of course, the option of the exchange traded products as well. And some people go that route for various reasons. They might have their compliance and regulatory setup easier to just get exposure that way. But really, it's still just a matter of education and coming around to the investment thesis, in my opinion, and just a matter of size. Now that Bitcoin's over 2 trillion, the entire market cap's over 3 trillion, it's finally to the size where it's on their radar. They have to take a look at it. They can't ignore the performance of some of these things. But in terms of getting them into DeFi and some of this really crypto native stuff, from my vantage point, we're still a long ways from there for the traditional financial institutions to do it. We see some of our clients, the more sophisticated ones, starting to dip their toes in, but the vast majority of money, the big pots of money out there, are still very, very far from that, in our opinion, and from where we sit.
I appreciate that idea. It's still interesting to understand. I mean, even if we're far from it, like what do you believe, or maybe I don't know if Jack or Nejc would like to follow on that. What pieces of innovation or infrastructure are missing for that actually to happen, and that adoption entering into DeFi?
Yeah, I mean, I come from a custody world, and I agree with Chris that custody was probably the long pole in the tent that needed to be solved for initially. But depending upon what type of traditional investor you are, you may have regulations that only allow you to buy securities, for example. So an ETF is an attractive product. There's other service providers in the ecosystem in TradFi that need to wrap their head around what this is. And so whether it's the auditors or whether it's performance reporting engines or whether it's tax folks, it is a different type of asset than traditional registered investment advisors, mutual funds, et cetera, have been investing in. I think that's why the importance of ETFs, for Bitcoin, ETH, XRP, Solana, others, they're anticipated to come soon. I think are going to be huge breakthroughs, and we've seen the demand increase significantly for access to those products, because it's really a gateway for TradFi to invest into a space, and to Chris's point, that is growing in importance. You can't ignore it, and it's really been an access issue. I think when you take a further step and think about how TradFi is going to enter into DeFi, I think that's going to be a slow evolution. It's not going to be an overnight sort of a tidal wave or tsunami that would evolve, in part because there are still some open questions around from a regulatory standpoint, the yield-bearing interests of a lot of these assets and how those get categorized, and also how you would access them. And I come back to stablecoins. One of the things that we do think is going to play out again this year with TradFi is the use of stablecoins as good collateral to access different types of trading assets, including entering into DeFi, where historically prime brokers and other sort of service providers have really requested or only accepted USD as good collateral. And given the characteristics that are native to certain stable coins like ours that are really US dollar equivalents in so many ways in terms of how they behave, you're going to see more and more stable coins being used as collateral. And that becomes a bit of a gateway or an on-ramp into DeFi. So I do think you'll see more participation in this bridging between TradFi and the Web3 space, broadly speaking. DeFi is going to take a little bit longer, though, I think.
Okay. If you would have to guess, though, if the objective of some of these institutions would be to participate into a financial primitive on chain, more than just going long, and having beta to the market, what would you guess would be the first thing that they would use DeFi for? What would be that click driver that they actually find value compared to the infrastructure that they have available to them?
So I guess no, I guess from my standpoint, be like, if you look at what's happening today, for example, in DeFi, what you can see is that there is, like, as the Bitcoin as an asset class grows, there is what are its role in the marketplace. So you start thinking about this, being the Bitcoin being a collateral asset, and that I think is kind of the first use case that you can also see out there. Folks like Maple. Basically, it's private credit, effectively. I got a bunch of Bitcoin that I want to borrow against. I don't really, the banks in the US can't help me yet. So I turn to DeFi effectively. So that'll be probably the first step. But this is obviously for those that are, and that's where I would potentially also see institutional adoption kind of start. And then follow, the next step, potentially you could think about, can some of those high-performing blockchains figure out a good trading proposition for some of the institutions so they can go and dip their toes and start trading on DeFi platforms? So that's, I think there are a few interesting things to look at that are, very, very out there today, very accessible, but obviously we have a few missing pieces on the rec side, and probably a few risk committees to work through.
Yeah.
if you're not using Bitcoin as collateral, but stable coins, would you still think your thought holds? Would institutions still see value on today's on-chain money market compared to their money market availability in traditional finance? Or we're not there yet?
Yeah, I guess the question then becomes, like, I think it's always hard to what's kind of the first step, what makes most sense. If I have a great accessibility to US dollars and money markets, and it doesn't make a ton of sense for me to shift part of my business in on chain right away. But as more players start participating in this digital economy, that means that potentially the size of the pie, or let's say the opportunity spectrum, grows. So I would say right now, probably if I have good access, no, but in a year's time, maybe when the private credit grows, size of the opportunity grows, that would also mean I would move in a more meaningful way, or to your question with stablecoins. That's probably a high level answer at this point.
Yeah, and I'll jump in here. I had a presentation and a conversation at an event with a number of very large banks, and they were all in the liquidity and money market business, and presenting these ideas of tokenization and giving them the rundown and tokenized money market funds and stable coins. The group really kind of split into two extremes in their reaction. And so I'm just relaying this. I'm not necessarily saying an opinion on this yet, but one's reaction was, I still don't get it. Why do we have to tokenize this stuff? It's already digital. It works great. We've got a system that moves this stuff around digitally. What does this do for me to tokenize it, like another layer? And the other group somewhat got it and had a bit of epiphany, and they said, oh no, this destroys a lot of our business models. If you're a bank, why would people keep money in a non-yielding checking account or savings account that's our float. That's our our deposit base. Where does our deposit base go if it can move at an instant, overnight, seconds, anywhere all over the world? And so they were having kind of a panic moment when they realized this. So that's the stage we're at. Just to give you some perspective, I think, in terms of how the traditional world is waking up to this.
Yeah, I think my thought to your question is really it's search for excess yield, right? And so that's what's going to attract the TradFi players coming in, and the ability to do that 24/7 and to move in and out. But it's really a yield harvesting sort of exercise and attraction. I think that's going to draw TradFi out further out on the risk curve, frankly, than a money market fund.
I agree with that, and it's surprising to see, because the yield right now is very enticing, correct? So you would imagine that you have this yield arbitrage and that it would very quickly come to a close, but it's just there, correct? And that showcases the fact that maybe there is something else that is not yet available, that does not allow them to take it.
Right.
Food for thought. In any case, maybe going a little bit more into, I would say, the degen side, or the early adopter use case. Also interesting to get your opinion into, okay, in the current DeFi landscape that we see, what are potential 0 to 1 breakthroughs that would you anticipate that would fundamentally expand the possibilities in crypto in the year to come? I don't know if anybody wants to go ahead and kick it off.
Yeah, I mean, I can start. I'm probably going to get boring at this point, but it's probably for the third time already. It's I think really like, so again, if you look at 24 and this the emergence of Solana effectively versus Ethereum, this big narrative that we've seen, and really what you figure out kind of what's the bottom line. The bottom line is that people care really about the use cases. They care about how what's the best use case. That's where the capital is going to effectively move into, and I think that continues. So that being like, I think from kind of a 0 to 1 is a couple of exciting high performing layer ones that are coming to market. That's what's interesting to me, because we see how much volume, for example, Hyperliquid is doing, and how this can really change trading. Like for example, from our standpoint, you don't really see DEXs as major competitors until they can get to 10 millisecond latency and 20,000 transactions per second. So at that point in time, they become major competitors. So I think Hyperliquid, and then I think Mega ETH is also a project in that category that's building something as an Ethereum layer 2. So again, sacrificing a little bit of that decentralization for increased performance. So I think that's kind of an interesting 0 to 1 in that specific niche. And then obviously AI and the potential of AI in terms of what new business models it can bring to the kind of the overall web marketplace. So if you can have agents that make you money, and they learn, they evolve, and they find new ways to make money, to save people time. Those are tremendous efficiencies. So I would say these two are on the more degen side, if you will.
Yeah, I was going to say on the AI side, and I'm not going to pretend to be knowing everything I'm talking about here. I'm very early into this, but it has struck me as a big leap forward. All the stuff going on in AI. What happens when some of those things get transported into the digital asset, the cryptocurrency space? So, for example, these AI agents. I just started learning a little bit more about these. I was talking to one of my colleagues here at Fidelity who was experimenting with them on the side, and being able to set up an agent and connect it to a wallet, and it goes out and starts trading. And he said he was even looking at the log, and he couldn't even understand everything this thing was doing, which is just fascinating. And of course, there's some of the things they're doing just doing at lightning speed, something a human couldn't do, or they're seeing things that we as humans couldn't see. And to me, the bigger underlying thing is you connect an AI agent, and it's the first time in history where we can have ownership of an asset, a money, a currency, however you want to think about it, without proof of personhood or a corporation behind it. So you have these agents that they don't have to go out and try to get a bank account to be plugged into the financial system and show that they're a person with an ID and a driver's license. I'm not exactly sure what what comes of this. But I do believe that this is something new and potentially this major leap forward that we haven't seen yet. The ability for these things to transact completely natively in a native digital asset or currency has never been done before. So that's potentially a big leap that we'll be watching closely.
I would just add two others. One, to complement what Nejc had said, I do think with more L1s, you're going to see more interoperability between chains and more advancements around bridging between chains, and that's going to open up all sorts of new possibilities. And the other thing I would say, and we pay particular attention to this as a regulated entity in many areas of our business, but I think you're going to see continued advancement around compliance tools, transaction monitoring. I think the service provider component or side of the industry is getting more and more advanced, and I think you're going to see continued investment into this space. You're going to see more solutions coming to bear, and I think you're going to see more and more of this kind of intersection between what you're used to seeing in TradFi and what's going to be available in the digital asset space.
You guys touch upon a couple of very interesting topics there. Maybe starting with some of the more boring ones. I have a question for you, Jack. Like, why are these compliance tools not managing to scale? Like, how come that like we all have to do KYC like 100 times still, like in 2025? Like, what are they getting wrong? Why cannot they just take my KYC from one place to the other? I don't know if you can give the audience a little bit of an insight on the problem.
Yeah, I spent an inordinate amount of time in the regulatory compliance landscape, so becoming a resident expert in all things. Well, I think part of it is I always, and I come from a TradFi background like many of us in the space, and so that's my point of reference. There's more uniformity in terms of investment assets in the TradFi space than there is in the digital asset space. So a security is a security is a security. There's tickers that are uniform. They're very easy to process. Trades from one bank to another. You never get into a conversation when a company goes public and there's an IPO, what exchange can support an asset and what can't from a technical standpoint, right? A stock gets listed in the US, anybody can trade it, all the different systems can recognize it, can report on it, can trade it, and it becomes instantaneously accessible to the whole industry. You go into the digital asset space and it's very, very different. It all depends on what chain you're launching an asset on, how it's built. And as we've been launching RLUSD, going to different exchanges, and there's a technical integration that needs to happen. It doesn't happen overnight. And so because of that lack of uniformity, I think it's been a real challenge for the industry to catch up in a real-time way to be able to support different types of assets, how they interact with one another. You get into bridging, you get into DeFi. We're really pushing the envelope here of a new capital markets. It feels like we as an industry are kind of rewriting a new operating system for capital markets. And because there is no harmonization across chains, there's no harmonization. I mean, just let's just take the most basic price of Bitcoin. What is the price of Bitcoin? And we might all go to different sources to find a price at any one given point in time. Of course, we'd all go to Bitstamp, but my point is that it trades in different places. And it's a 24/7 asset, and there is no one price that we would all agree upon. You want to look at the price of IBM, you go to New York Stock Exchange, there's only one price. It closes every day at 4 p.m. Eastern time, and we would all agree exactly what that price is. And so you just think about that disequilibrium that exists, and it's not surprising that the industry has not matched where we are, ironically, in TradFi in terms of our ability to monitor and report on these assets, because we're really in the new frontier. I do think we are making advancements, and I think the regulators are pushing entities like us to really be front-footed and to be exploring constantly what the art of the possible is in terms of reporting on these. And I personally think, while it may not be the most exciting, you are going to see a lot of advances in this area.
Another point, I mean, that was not mentioned here, but interesting to get your view on, is when we look at the TVL that we have right now on chain, on DeFi, right? We're talking about still a small pie, right? It's around $120 billion at the moment. From that, something around 15, call it like a cool 10-15% of the market is already what is commonly called as RWAs. Yeah. And how can these innovations accelerate the adoption of RWAs, if any? And do you think it will be a market that will continue to expand in 2025? Maybe Chris can take that from Fidelity Digital.
Yeah, we have a bit of this on our look ahead as well. It's one of the areas we're watching and we think is going to grow substantially. Personally, I think you're going to see the easiest growth being the financial products, whether they're tokenized treasuries or money market funds, because again, they're already digital, so it makes sense that you can easily do this. The one that I haven't been able to get a really good answer from people who are experts in this space, and maybe some of you know, is how to make the leap to the other real world assets, the more physical ones. So, for example, property, real estate. Someone might say like, okay, that's nice. You have a digital token that's supposed to represent this property, but I have the deed here and the title, and it's got a copy in the county records office. So good luck. So there still seems to be this big chasm where we're going to have laws and regulations in the legal system learn to recognize these things as well. And I'm not exactly sure how or when we get there, but that's why we think you'll continue to see the growth on the financial side, but less so on more of the physical brick and mortar side of things.
It's definitely a chicken and egg sort of phenomenon. I think we've all been expecting that RWA would grow meaningfully, year on year over the last, whatever it's been, 5 or 7 years. We've all read the 2025 predictions, and RWA tokenization is one of the top 2 or 3, that I see out there. And I think it's one of those interesting situations where I think the industry is actually ahead of the demand side. So the technology certainly exists. We're starting to see some successful introductions of tokenized assets. From a financial standpoint, I agree with Chris. Money market funds are one of the easiest to roll out, and why we've seen a big number of them coming out. And the question, I think, is dependent upon when you're going to see demand from the broader market for a tokenized real estate asset or a tokenized secondary fund. If you take a step back, tokenization represents a number of advantages, but from an end investor standpoint, there's really an advantage to liquidity for assets that are otherwise illiquid. I own a stake in a real estate fund, and I've got to wait 10 years, or it's a long tail venture or private equity fund, and I want liquidity. If you could take my fund and tokenize it, and if there was a ready market and I could sell off some of my stake, that's meaningful. Or if you can take what's otherwise a large investment and break it down into a smaller size that becomes more accessible for more investors, you would think just that liquidity would be attractive to asset owners and fund managers, et cetera. So conceptually, it makes a lot of sense. And the technology is certainly there. There's more and more tokenization platforms, custody is available, the exchanges will trade it. It's really dependent upon more demand, I think, and the demand just hasn't shown up quite yet.
Yeah, the only thing that I would basically add to this is how to sort out demand effectively. And if you think about it, on the institutional side, it's probably about getting those kind of digital first type prime brokers who are deeply embedded in the digital assets ecosystem. So they think in blockchain terms effectively, and they're very open to bringing some of these assets and solving some of these problems. So getting those guys involved into real world assets effectively. So today I think we've got Coinbase Prime is probably dominating the space on the prime brokerage side. You probably get Falcon X and then a few other players that are out there. But I think in the US, with increased regulatory clarity, I do believe that 2025 is going to be like a year of the prime brokerage, quote unquote, where some of the big financial players kind of come in and start building that digital assets infrastructure. And alongside, you also start thinking about the real world assets. And then you might see, for example, one of the predictions here is Coinbase might go kind of reverse themselves into the traditional finance system and maybe go and acquire a traditional broker. They already did a couple of years back, but probably missing a few pieces of the infrastructure. And I think they got 100 million users. They've got a tremendously large book, and that's how I feel you kind of bring that demand into the marketplace. And then similarly on the retail side, see we dropped Chris. On the retail side, the folks like Robinhood and those like Revoluts of this world, for example, that have like big pockets of demand effectively, if those folks starts rolling out and looking at some of those products, that I think could facilitate demand. And some of these high yielding products that we've spoken about, I think could be tremendously attractive to some of the retail portfolios that are out there as an addition, basically, in this environment. You can, to your point, David, you can generate double-digit yields in some of these assets quite easily, and it's out there for the taking.
Incredible, isn't it?
Yeah,
incredible.
I see you are really having a hard time to see why this is still the case.
Yeah. And every time you take the yield, you just wonder why didn't you just go long, but still. And I guess that's why it exists. No, but it's good for us, I guess. We lost Chris, but like for the closing part, we wanted to bring a little bit of like a contrarian question and get your view on what are the things that you think are not going to work. What is okay? Chris is back. Let's do. Hey, Chris.
Hey there. Sorry about that. Not sure.
Don't worry. So we continue with the next part. We're entering into a little bit of a contrarian section. When I get your view, not on what's going to work next year, but what is not going to work next year. Correct. So what are the things that everybody or you believe that people are getting wrong, or that straight not going to go the right way in the year to come?
Ooh, that's a good one. I mean, one thing in our report we went over, and this was an opinion of the analyst that we had, was a lot of the speculative stuff that we've seen, especially on Bitcoin, the runes and inscriptions and stuff like that will be a fad. So those spiked, especially with the halving, and we don't think they're coming back, although it'll probably be something new or different. But in terms of maybe what's overlooked, I don't think this is going to go wrong, but what's overlooked is, and I've been saying this for a while, is I don't think people are understanding or correctly estimating the amount of demand we could see for digital assets, especially now that we have exchange traded products in the US, from the advisor side of things. So in the US especially, most of the money is advised money. It's not, we definitely have individual do-it-yourself investors, but a lot of the big pots of money are advised. So most of our wealth is advised, and that's anywhere from a 50 to 100 plus $1 trillion market, depending on how you want to count it. And we're barely off the starting line. These products are starting to be available. Some places they're still not even available. Many large advisors and wirehouses cannot actively solicit or recommend these products. They have to have people ask for them. They're not yet making their way into model portfolios or allocations or anything like that. So you can say this and it sounds kind of cliche, like you're underestimating this. People say like, yeah, okay. But when you start running the numbers, if even 1% of these advisors and advised money start to allocate a few percentage points into this new asset class, you start to get some really big demand numbers that I think people are underestimating.
What about you, Jack?
I think I share that view. I think more and more utility is going to come into the market. I do think you're going to see more traditional investors and a new cadre of investors coming into the market. And so to answer your question of what may not work on a relative basis, and I'm on the older end of the spectrum in this industry, so maybe I'm a bit old-fashioned, but I don't think you're going to see the meme coin mania this year, in part because I just think the opportunity set for high quality digital assets is going to continue to increase, and I think the demand is going to go in that direction. There's always going to be folks who want to speculate in the more kind of esoteric long tail assets, but I think on a relative basis, my money would go in the more kind of upmarket, if you will, types of digital assets that are increasingly available than on the meme coin side.
Have you heard of meme tech?
No, I don't want to either.
No. Like the whole growth of meme coins have actually sparked this whole idea that you can build like specific like decentralized finance primitives only for memes. It's actually a fascinating phenomenon. We'll see what happens with that. What do you, Nate?
Yeah, I think so. Maybe just for kind of on a, for kind of for the crypto natives, I do feel that we've all heard about this, not your keys, not your coins statement probably many times. But I do believe that, even coming from the centralized exchange space or not really, I don't believe this is yet a concept for everyone, or even furthermore, I don't think it's a concept for the majority of the retail market participants. I just from many examples that I see, just in a group of people that I interact with who are kind of crypto savvy investors, and the number of mistakes that have been made and the number of funds that have been lost in kind of holding your keys and your coins and just wallet hacks, etc. I think it's just overwhelming, but it's kind of an overpowering narrative in crypto by the crypto natives. But I don't think it's necessarily the right narrative for the majority.
Let me see if I get it there. You think more smart contracts would implode than companies default on people? I get it.
No, differently. I think more people will lose their keys or interact with smart contracts that they shouldn't interact with, then they get blocked by a compliance department at Coinbase, for example, like something like this, so along those lines. So that's maybe one. I do feel that folks are going to get way too bullish on AI this year overall. So AI agent space, it's going to, I think, implode spectacularly. That would be one of the predictions. And to Chris's point, BTC DeFi was also one of those on my list that maybe it's not gonna play out the way some folks are expecting, maybe.
Interesting. That's actually a good contrarian thought there, because there's a lot of investment and push from a lot of large players into enabling Bitcoin, precisely because of the point of its use as collateral, correct, into the DeFi space. So it's interesting. And what, just for curiosity, what do you think is the main reason that it wouldn't?
Yeah, I think just maybe going back to that kind of the overall thesis of utility, I totally buy the collateral angle, by the way. I was totally there. That's the kind of the foremost use case, even if you reverse it back into like US treasuries and you kind of, think about gold and then you think about Bitcoin, the collateral angle is totally there. I maybe not completely sold on the whole, like, smart contracts, utility, et cetera, and like ecosystem development, primarily on Bitcoin. I'm not sure if it's even needed. That's maybe
fair enough. That's good. So
can I ask humbly ask our host what you think is not going to work this year?
Yeah.
Oh, that's a good one. Go on, Jack. Go on. Wasn't gonna work this year. I've done a lot of thorough research into the AI space, and I do think it's actually too early. I think majority of the companies building agents at the moment are using it for marketing purposes. Not saying that they're not going to be successful companies, but when you look at it under the hood, the decision making is not yet done by the AI. So what I think is that it would just implement a layer of automation, which we're looking forward to use, so that our processes and operations will be cheaper. And I think companies would do that. But I don't think it's going to generate market cap value in the way that people want it to. Not just yet. At the infrastructure layer, I think it will, but maybe not so much at the let's say the agent layer. And like on the point that you made on meme coins, and I mean, I don't know if you're aware of this, but the latest evolution of the meme coin market is actually going towards co-own agents, correct? And now it's not a meme, now it's like an agent that you can co-own and trade and speculate on, and that's actually getting a little bit out of control at the moment. We'll see how it goes. Even if memes don't continue to go the way that they are going, the agents might, and I do actually, on a little bit of a contrarian to your point, I do unfortunately think that meme coins are gonna do pretty well. And I'll explain you a little bit, just really quick, why. But there is this narrative that plays in the minds of a lot of people in this industry, and is that a meme coin doesn't do anything, but it's also not unfair. and that is like fundamentally a very strong social movement. So I don't think as much a speculative asset as they are a social movement. And I think when the social movement stops, then they will stop. But I don't see it stopping, actually. If any, I see it going strong, because what people see in the industry is that there are more and more projects that have more and more venture capital on them, and they just don't know how to participate there, because they just feel that if they buy a coin that has venture capital on, they are basically used as exit liquidity for somebody that is rotating capital. And that is a narrative that is actually very strong to fight against, and that's why I think it will most probably still persist, at least for a couple more years.
Well, let's do this again at the end of the year.
We'll see. I mean, I'll try. Amazing, guys. Just to close, final thoughts. If each of you want to close, just give a small prediction of something positive for the year that's going to happen, and where to find you, how to get in contact, and we can close there. Maybe we can start with Jack.
Sure. I think 2025, the year of the stablecoin, and particularly in payments. I think it's the killer app for global payments. We know a lot about payments here at Ripple, and also, as I mentioned, collateral into TradFi. I'm jmcdonald at ripple.com, or you can find me on Twitter.
Thank you very much, Jack. What are you, Chris?
Yeah, I think for 2025, this isn't just a 2025 year prediction, but we at Fidelity Digital Assets in our report wrote that we think it could be the start of a new era. So the turning from a lot of the first 15, 16 years of this, a lot of booms and busts, and now the new era of the institutional money, and where really this as a technology breaks out of just its own silo, and it permeates all kinds of other industries. So if you look back at world-changing industries, they don't just change their one industry, they change all industries, they change the way people communicate, the way people organize their companies and structure their capital. I think that's where we're finally starting to get to. Now, this is going to take decades to play out, but that's my bold prediction, my big high-level one. And you can find all of our research at fidelitydigitalassets.com, and I am on X at Chris J. Kuiper.
Thank you, Chris. What about Nate?
I was just going back to the first point that Chris made. Obviously, I second Jack's thoughts on stablecoins. I think definitely could be a year of Bitcoin. So you could see that, if we get a strategic reserve, you could really see this game theory, play out, where you take this 2008 phenomenon basically from, out from the. It's going to be extremely interesting to watch if we get this strategic reserve basically and take a moment and think how far we've come, Bitcoin wise. Like, it really could be a crazy year, I think. So I could, you could easily see, going towards kind of a, that 10 trillion mark overall on digital assets. If it gets really, the animal spirit start flowing a little bit, and with the good, macro background, macro cocktail, you really can envisage that happening. Now, this is kind of a very, I would say, a bullish thought, but yeah, why not? And then last but not least, like I'm going to have one equally contentious. I think that XRP will flip Ethereum this year, and I've been getting a lot of heat for this.
That's a good one. Some love being shared here. Okay, fantastic. Thank you very much, guys. I appreciate a lot of your thoughts, and I wish you a very good day.
Thank you
so much.
Thank you very much.